Hello and welcome to Tax Matters. I am Pearl Nameka, and with me on the episode is Chiamaka Ohauchi.
Last episode, we dealt at length with the issue of tax enforcement against the backdrop of the lien placed on bank accounts of defaulting taxpayers in recent time by the FIRS.
Due to time constraints, we couldn't conclude because so much transpired at the seminar, with a very robust question and answer session thrown into the bargain. Today's episode is essentially meant to further extend the boundaries of the discussion. It is hoped that the question and answer session will address many of your concerns on the matter.
But before sharing with you the question and answer session, let's take some more taxation lessons from Mr. Oluwemimo.
I've mentioned company income tax before. The rate of tax is 30%. When I say 30%, it's 30% of taxable profit, or what we call total profit. For company income tax, is submitted once in a year, yearly, and is 6 months after the accounting year end. Meaning that if your accounting year end is March, then you must submit on or before September of that year, not the following year. If your accounting year is December, you must submit by June end of the following year. That is 6 months. Then we also have tertiary education tax. That one is 2% of accessible profit. It's not the same thing as 2% of total profit. It's accessible profit. That one is also yearly. Then we have the personal income tax. These are the various rates. The first 300,000 is 7%, and the next one is 11%, and like that until it gets to over 3.2 million, which is at 24%. It's being submitted monthly, and it must be submitted on or before 14th date in the subsequent month. And when you are submitting it, you submit it with payroll schedule, pay computation, and evidence of payments. Then we have the VAT. Yes, VAT is 5% of your sales, of your total sales. That is, my total sales for the year is 100 million. 5% is coming to federal government as VAT. But there are some adjustments. There's what we call input VAT. The 5% of your turnover is what we call output VAT. Whatever you have suffered, maybe when you are now buying that product that you want to sell, from where you purchase it from, they have charged you VAT. That is what we call input VAT. So when you are now submitting your tax returns, you remove your input VAT from your output VAT. It is the difference that you remit to Federal Inland Revenue Service. Let me be practical now. I'm selling a phone. Before I sell that phone, I have to buy it anyway, because I'm not Samsung that make that phone. Is that okay? Then where I'm importing it from is 100 million, the unit. Ordinarily, I won't sell it everything 100 million. Is that right? I have to put what we call markup. Is that right? That markup is what we call value added. You have added value onto it. So let's be practical now. 5% of my 100 million, that's 5 million, Abi. That's my input VAT that I've suffered. Is that right? So when I'm now selling it, my sales is 120 million. That's 6 million. So my output VAT is 6 million. My input VAT is 5 million. What I'm now remitting to FRS is what? Gaskia.
The discussion went even more practical with this intervention from a bank official.
One of the reasons why we are doing this for SMEs is because they are not properly as structured as most businesses. And like you said, majority of SME will stay within the trading. And what you see naturally is like in SME, there are different chains. So you have people who are mostly distributors. So you have people who are mostly the sellers, so they buy from the wholesalers. And whether they are local wholesalers who are buying from manufacturers, or they are buying from people who have imported. And usually you find that most of these guys, if you're importing, you have paid VAT at the point of importation. Most of the big companies will have taken the VAT. So this is where their challenge comes in. So when they come in, all they see, even us as a bank, when we want to look at their credit, we always ask them, what is your turnover? Which is your sales turnover. So, and the experience we see is that sometimes when the tax is applied basically from the sales turnover. And if you understand this kind of business, most of the time their margins are usually like 1%, 0.5%. So that fear is what is costing them to look for alternative. They don't understand, they want to run away. Maybe I want to now trade my personal name so that I run away from the tax. So can you just help us explain, if you're a distributor, if you're an importer, do you understand, if I've already paid VAT at the time you're clearing, so how else do you calculate the additional VAT so that, it will be a lot easier?
You see, a taxpayer, when this lien started, he came to my office. This is a man that has not even registered with FRS. Has not even registered, not even talking about filing returns. Unfortunately for him, because he has not been filing his returns, a taxman will not know whether that is his sales or not his sales. And this is how it works. Let me tell you. You see, the man is also selling phone. But that phone he's selling, he got it from some people that was, okay, take it as stock. Whatever you use, sell it. This is your margin, commission. Take. Are you getting me, sir? For us, we won't say, okay, come and pay VAT on everything. It should be on his commission. But the onus is on you to say, I've declared my income and I've paid my tax. If you have any other thing you use, come and audit me. So, but just like you say, if you have a distributor will get the product from somebody and they will charge VAT, and that's what I call input VAT. But when I'm getting it from somebody, I will not sell it at the same price I'm getting it. Is that all right? I have to do what we call markup. I will increase it. And that's how the name comes about, value added. That means I have added value before I sell it. So if I'm now selling it at a higher price, of course, the VAT I will charge will be on my sales now. They have to net off my sales from my input VAT, and I pay the difference. As simple as that.
We have a product we are getting from a local manufacturer here in Nigeria. It's a plastic product. And the manufacturers give us at a price of 15,000 naira for a carton. And we are now selling as a distributor at a range of 15,500 naira, some 15,300 naira. As a profit, we are making 300 naira or 500 naira thereabouts. And for instance, we order for 50 cartons, 100 cartons in some cases, and our profit there tends to be 500 times 50 cartons is about 25,000 naira as a profit. And by the time we are going to the factory to go and get the goods to our warehouse, we pay a bus driver who helps us to go to the warehouse, to the factory, to get the goods, and we pay the driver around 8,000, 10,000 in some cases. In all this now, our profit is about 15,000 naira left. And in some cases, we have staffs working for us. We have local people help us to carry goods and all that. We give them some 500, some 1,000, some 200. And at the end of this, in a month, we make 15,000. Are we going to add the cost of transportation as an input to the to our profit? Or are we going to deduct it from the tax we are going to declare? Because it's costing us some tax computation problem. I don't know how to plus this and minus this, and what they are charging us now, the lien they give to us, is too outrageous.
I give an example. In the course of the enforcement, we've seen there are people who have fixed prices. If you look at the breweries, all the people that sell their beer or their Coca-Cola, they have told them to sell at a fixed price, is it not? So what we did with those people was we looked at the invoicing with which these goods were sold to them. Those invoices stated they had been billed for VAT. Okay?
Okay.
Yeah. When the cost price was factored in, those VAT had been added. Okay? So the sellers for those Coca-Cola products are not expected to add VAT to what you are to pay because they are fixed. They have told them pay at these prices. So what we have done basically, the person, though those VATs had been there, should also file returns. The challenge is that people do not file. Even if you are not supposed to pay VAT, you are expected to file your return showing 0 VAT. So those people who are into those distributive trades will send their VAT return showing that they have an input VAT. And that summarizes, we lifted the liens immediately. If the people dealing with you have charged you VAT as a day because they are to charge VAT,
yes, of course,
file the return. It shows that you had paid VAT because they have a margin. You can't sell yours above what others are selling,
exactly,
but you have not been filing those returns. So register for VAT, file at the end of every month that you have been filing. What the taxman wants to see is compliance. You make a law, show those things, submit the things, register every month, they stamp. So if someone calls you, I have been filing this, we are not interested about the quantum. It's about compliance.
Tax compliance is not only about assessment and payment. The taxpayer is also encouraged with incentives.
So let's quickly look at various tax incentives. The first one we call right of election, to pay tax either on preceding year basis or actual year basis in the third year of commencement of business. I hope you know that we don't tax loss. Once a company makes loss, no tax. But there is what we call minimum tax, meaning that everybody must even contribute to government purse. But if you are a small and medium enterprise, or any business for that matter, in the first calendar year, you are exempted from this minimum tax at all. So that's one of the incentives that is available to SME. Then the right of election I was talking about is when you are submitting your account for the first time. The first account will be used to assess you for 3 years. First account will be used to assess you for 3 years. And let's say your tax for that 3 years is 50,000. Based on actual, then maybe if it's on preceding, it's 75. You can elect and say, no, I don't want to pay 75. I want to pay on 50. Those are one of the incentives that at least government will make sure that you don't die before you reach the age of 5 years. Then there's what we call investment allowance, which is 10%. If you incur any cost on plant and machinery, they will give you investment allowance or what we 10% of that cost. We only tax profits. Since 2007 now, you can carry your losses indefinitely until you make profits. That's one of the tax incentives that is available to us. Then there is also Pioneer. It's another incentive. Pioneer simply means that there are some businesses that are exempted from paying tax for 3 years. You can also apply for additional 2 years. And we call it tax holiday. There are some companies that are giving tax holiday. And before you are entitled to tax holiday, that means you are embarking on a business that other people have not gone into. That is what we also call rural investment allowance. If your business is located 20 kilometers away from facilities, that is, if you don't have facilities at all in that rural areas, 100% allowance, you are entitled to it. If you don't have electricity, 50% allowance. If it is road, 30%. If it is water, 15%. That's in addition to the investment allowance. Then if you are into hotel business, 25% of the incomes in convertible currency derived from tourism shall be exempt from tax, but provided that you bring the money back into the business.
Taxation 101.
Yes, Taxation 101.
Now to the question and answer session.
I have a question about loss-paying companies. If you have a loss-making company, Section 32 of the CIT Act says you don't have to pay any taxes for any corporation taxes for 4 years. But your guys at the tax office always insist you still have to pay something. That you have to pay something based on the turnover, not on your loss. That is killing a lot of SMEs in Nigeria, and I wonder what you have to say about that.
Like I said in my slides, that we don't tax loss, we only tax profit, except for the minimum tax. So if you are sure that your company incurred losses for a particular year and you have filed your returns, and you know you are sure of what you are doing, no tax person will ask you to submit losses. When you encounter something like that, that your company incurred losses and they still say go and pay something, you can flag it up.
Is enterprise account supposed to pay VAT?
Yes, depending on their business.
Yes.
The only thing enterprises don't pay is company income tax. Enterprises do not pay education tax. Okay? But for the business, the only registration you should have with FIRS is VAT. Enterprises that are involved in their businesses that are VAT exempt, like going to hospital, buying drugs, basic daily life things, schools, you don't charge VAT. Do you understand? So those water, somebody buying water, pure water, even bottled water, there was a time FIRS insisted on bottled water, and there was a court, there was a court decision which said whether packaged, whether processed water, water is water. So if the people there have been charging you, go ahead and file. We are not telling you to go and pay again. Are we okay? But you must not run the normal cost. It's not a service that will tell you not to pay transporters. The transporters will not come to us. You pay them to carry your goods.
As we have always said on this program, no business is exempted from charging, collecting, and remitting VAT to government. It does not matter whether it's a business name, an enterprise, or limited liability company.
Only a few goods and services are exempted. Educational materials, medicaments, baby foods. Last but not the least, only the FIRS collects VAT. So, again, like we always say on this program, everybody has business with the FIRS.
The Federal Inland Revenue Service FIRS calls on all corporate organizations operating in Nigeria to register for the purpose of payment of taxes and obtain a tax identification number TIN. All registered companies must obtain a tax identification number immediately from the nearest FIRS office. You can also collect and return tax registration forms from the Federal Inland Revenue Service Engagement and Enlightenment Tax Teams, FEET, on compliance checks exercise in your area. A company which is yet to commence business after at least 6 months of incorporation must pay a pre-operational levy of 20,000 naira in the first year and 25,000 naira for subsequent years to obtain its tax clearance certificate TCC. Note that filing and payment of VAT and withholding tax returns must be done on or before the 21st day of every month. Register for VAT. File all tax returns as and at when due. Be a responsible corporate citizen of Nigeria. It pays to pay your tax. This message is from the Federal Inland Revenue Service.
In reaction to suggestions of some unwholesome practices by a few tax officials, Mr. Obiagu responded this way.
The truth is, they are bad eggs. They are bad eggs. And All I tell people is that when you run your business and do things properly, you'll be able to stand your ground. That's the truth. The service has a lot of processes. We have a lot of process. Someone audits you. You have a good accountant. Someone comes to audit you and gives you a bogus tax bill. Object within the time frame. And the moment you object, there are processes for reconciliation. Do you understand? We have also provided an avenue that allows people to move. At your instance, you can move your file from one tax office to the other. Because these human beings are in a particular tax office, you have access to move your tax office from one place to the other. So if we keep our books properly, if you know that your tax liability in a year is 15 million, and you are ready to pay your tax, you don't have the money, you want to enter into instrumental payment, which I have told you today the service allows. If we are patriotic and say we want to do our own bit, let me pay my tax, the truth is extortion will be minimized.
Tax Matters spoke to one of the organizers of the seminar.
What necessitated this engagement forum on tax sensitization?
When we looked at the SMEs in particular, we realized that their needs are peculiar. And one of their needs are that they require advice on how to manage their businesses. Advice in a number of areas. Examples of some areas will be for their taxes, their legal issues, HR issues. One recurring issue has been tax. There's been a lot of complaints from our customers as regards, why am I being charged this amount of tax? Why is my account being liened? So there was a recent policy from the tax, from FIRS, where banks, not only FCMB, all banks in Nigeria were asked to place liens. That means that to hold certain amounts of their customers' money on behalf of the tax authority. And we had to then inform our customers that by regulation and by status, we have to comply. And a number of our customers didn't understand why we had to do that, despite the fact that FIRS had been communicating through various media about the fact that this was going to happen. So we had to start educating our customers. And we looked at it and we said, look, why would not come bring the taxman, and our customers and facilitate some engagement so that there's better understanding of why the taxman is insisting that taxes must be paid and the approach in which they have taken.
Tax Matters also sought further clarifications from Mr. Obiagu.
Concerns have been raised, have been expressed about the enforcement action and procedure. What's your reaction on this?
I think the enforcement procedure at FIRS has a lot of human face. For close to 9 months, FIRS spent a lot of time on sensitizing taxpayers on the need to comply. And when taxpayers find it difficult, especially those that do not have the requisites or the right sums to pay off, the service does enter into staggered payment plan, which the executive chairman is ever gracious to approve.
What are the challenges these SMEs are facing, and how can we get them to pay taxes?
Record keeping is an issue for most of them. The SMEs, I think the time has come for us in Nigeria looking at the concept of shared services, okay? For SMEs to see how they can have shared service. They cannot afford all that, but they can get shared service, have an accountant, attend to a whole lot under a pool. So SMEs should be able to pool resources, do a whole lot of things under shared services arrangements. That will reduce their cost of operation and make them to be more efficient.
We do hope that we have once again been able to contribute to your knowledge on the workings of the Nigerian tax system. Let's do this again next week, same station, same day of the week, same time of the day.
Bye for now.